Hello, 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 and welcome. Let's get everyone in the room quickly. So I can see the people are coming in. Let us know when you come in, where are you coming from? It's a freezing cold night here in Knysna, South Africa. So I've changed my outfit to a warmer outfit because it's pretty cold here. So you can see Peter's in Pretoria. I'm sure Peter, it's probably, I don't know if it's colder down here in the Western Cape in terms of this overall process. But yeah, where's everyone coming from? Nice to see so many people. I hope you enjoyed some of the research that Shane and I have been doing into some of the top 10 investors. And we sent one yesterday with regards to Robert Kiyosaki, and we send one today with Dr. Dolph de Roos. It's been fascinating looking at the different, research that's come out. Nilesh, lovely to see you from Ladysmith. And I've got some good news about Clem Sunter. So if you hang on a little bit, I have some news to share with you about Clem Sunter. So just as a matter of interest, who here would like to hear from Clem Sunter? So Trevor, lovely to see you. Louisa, lovely to see you. And I can who here? Patricia, lovely to see you again from America. So who here would like to come and learn from Clem Sunter live? Does anyone know who Clem Sunter is? Anyone want to give it a guess? I'm engaging your brains on purpose. Neville, welcome from Pietermaritzburg. A lot of South Africans tonight. So Clem Sunter is one of the top 5 strategists in the world. And I'll actually go to that now. Let me just welcome everyone. So firstly, welcome. We do this monthly. So the Diversification 5.0 Masterclass. For some of you, like Peter and others, you've seen this before. And so we pretty much run the same series once a month for people that want to come and learn, etc. And then we evolve other courses, where there's further information. But what we really want to share is the 5 most important lessons that we've learned from the wealthiest investors over the last I've been doing this 24 years now. What I wanted to share with you is I launched this book 10 years ago, Property Going Global. You should be able to see it. Why can my camera not see myself? Where's it gone? There we are. Property Going Global. It's a bit bright. And it was actually endorsed by Clem Sunter. So Clem Sunter is one of the top 5 strategists in the world. He was chairman of Anglo American and is very highly regarded around the world. He's lectured at Harvard. He's got a doctorate from UCT. He worked with the South African government to help with the whole transition to democracy. He's worked with the Chinese government in terms of their strategy. And probably, for South Africans, he's best known for his work in terms of the high road and the low road as we kind of went through into the new transition. So we're really excited. We've actually launched the upgrade of the book, Property Going Global, in terms of wealth going global. And we went and researched 10 of the biggest authorities out there and what their key principles were to success when it came to investment. So if you are interested, go to that link, wealthuniversity.org/wealth going global. Maybe if you could just pop that in the chat box, Shane, if you're there, I'd appreciate it. And for anyone that goes and actually signs up to that link, we're actually going to, and it's hot off the press, no one actually knows about it. The email's only coming out tomorrow because Clem only confirmed yesterday. But we're going to be having a live webinar with him next Thursday. So it'll be 11 a.m. UK time next Thursday, 12 p.m. South African time, which allows the Australians to be part of it, and the New Zealanders, and also the people in America to be part of it. So it's going to be super exciting. Thanks, Shane, for putting the link in. If you go to that link, then we will be letting you know about when Clem Sunter is actually, the details and how you can actually sign up for it. So that's pretty exciting. I've learned so much from this man in terms of where the world's going, global scenarios, how do you invest, where's the right place to invest, what are the flags? And, yesterday on the course, Wealth Going Global, I I tried to do a synopsis, and I've actually got all of his research here, all his different research, his latest book, Thinking the Future. But, my philosophy that we're going to talk a lot about tonight is getting access to the right information and the right partners. And so, why not just go straight to the horse's mouth and actually ask him? So I'm super grateful that he's prepared to do it live. And then we're also going to be sharing a private session, which will be a private Q&A session for our masterminders and for the people that are part of Wealth Going Global and the Wealth Hackers. So it'll be a private session for people to be able to ask questions with Clem Sunter. So that's unique. You can't buy that in terms of being able to get access to him and ask your questions in terms of where you are in the world and what you think. So I don't know, maybe it's just me excited. No one else seems to be super excited about Clem Sunter and the fact that he is live next Thursday. The next day is a public holiday. It's Youth Day. So I think it's pretty useful and pretty awesome. So if you are keen, just go to wealthuniversity.org/Wealth Going Global, and we can let you have some more information. So I got a question for you tonight, and wherever you are in the world, Patricia, it's not your night, it's your lunchtime. But what would it mean to you in 12 months or less to be earning at least $5,000 passive income without any hassle or complexity? So just take some time. What would it mean to you if in 12 months or less, you would be earning at least $5,000 passive income without any hassle or complexity? And secondly, what about if I could share a system with you statistically that'll help you get there 5 times faster, safer, and simpler? So not my opinion, based on the research of Harvard, that there are systems out there. You can either go create your own or you can literally copy, but there are systems out there that can help you get there 5 times quicker, simpler, and safer. So if you'd like the answer to those 2 questions, then I recommend that you stay present, stay engaged, answer the questions, and we're going to have some fun. I can see there are lots of people online, lots of people from around the world, so I'm always excited. I love sharing. It's one of the things. Someone was asking me, "Gee, Scott, you've been doing a lot of presentations, and doesn't it take it out of you?" And I said, it does, but I'm super grateful, because one of the things I love doing is educating and sharing the knowledge. And secondly, I love inspiring people. And so it really does fill my bucket. So as much as I've got gratitude that I get to do this, I've got gratitude to all of you. And I hope that you walk away with a lot of value. And my primary intention tonight with Shane is to be able to answer these 2 questions for you in terms of that process. So what do we believe in? It's about living a life unlimited. And what does that mean to me? It's the freedom of choice. It's the freedom to live where you want to live, go on holiday where you want to go on holiday, work with who you want to work with, send your kids to whatever school you want to. And I think what's quite important is, for me, it's how do you do that? And, my fundamental belief, having watched investors, wealthy investors from all over the world, is that it's through diversification. And so I'm going to share with you a couple of core principles, but I want to start with story, because I think this story is something that certainly means a lot to me as an individual. So there were 2 brothers. The one brother, it was 1976, and there were a lot of problems in Zimbabwe. It was then called Rhodesia. And so the brother decided to pack all their stuff in a car with his wife. And in those days, you couldn't take anything out of the country except for what you could fit in a car. So they packed all their lifelong goods into a car, and they drove from Zimbabwe down to South Africa to Durban and literally started again. So completely reacting to the political and economic scenarios within their country. There was a second brother, and sorry, this reactive brother, I'll tell you more about the story, but it had a very difficult life. It was very much a reactive process, based on like a cork on the ocean, being reactive to external circumstances. The second brother decided to do it differently. He decided to be proactive. So in 1980, he stayed in Zimbabwe, but he opened his first offshore bank account, and he started investing around the world. He started investing in first world assets, and he started, building up globally diversified passive income. And in 2003, 23 years later, he wanted to move to Australia, and he bought his way into Australia. Secondly, he bought a house for cash in Australia. Thirdly, he sent his kid to one of the top private schools in Brisbane, and his kid subsequently went on to get a whole bunch of opportunities to go rowing at some of the greatest schools, universities around the world. And I always joke, but one of the things that I think is most important is he didn't actually have to work for an Australian. He was in control of his own destiny. I mean, there's one Zimbabwean I met in Australia, and he said, Scott, I used to be a general and now I'm a foot soldier. And I think there can be nothing harder than working your whole life, your whole 20s, your whole 30s, your whole 40s, and then you move to another country and you go from being a general to a foot soldier. So don't take what I'm saying here. Yes, there's a bit of comedy in it, but don't take it lightly. So the question I got for you is that you got the one brother that's reactive and 100%, basically their life is tied to the results of a country. And on the other side of the fence, you've got a brother that was proactive and was in control of his life and has lived a life of, abundance, quite frankly. And the question I got for you, would you like to be brother number one or brother number two? Brother number one or brother number two? Because, these stories are important because they make it real, they make it personal. Louisa would like to be brother number two. So Louisa would like to be Patricia number two, Tapiso number two, Peter would like to be a combination of both. For me, these stories make it real because what I've learned in life is that, through storytelling, you can share the knowledge a lot better. I actually learned this from Nelson Mandela than by just teaching you the facts. So the first brother was actually my father. And that is a picture of me and my dad. It was my first property project when I was 13 years old. And what was interesting is that my dad did what you all taught to do. He went to school, he went to university, he worked hard, and he got a great job. He ended up becoming financial director of a listed company. He invested, he paid his taxes, and yet when he died at the age of 59, he died broke. And I was young at the time, and I thought to myself, well, this is ridiculous. Like I'm pretty much following the path of my dad. I've gone to school, I've worked hard, I've gone to university, I've got a good job, blah, blah, blah. And then I went and did the research, and I did a course by Dr. Hannes Dray, and I was astounded to find out that 94% of people at the age of 65 actually retire dead, broke, or reliant on the government. And I was like, that's ridiculous. 5% of people retire financially independent. And, we all sit here and we go, oh, that's great. I want to be financially independent. But actually, when you look at the way the financial industry works, they earn 25% less than their last paycheck. So they're 25% poorer. And, a great story of this, literally last holidays, I'm not going to mention the person's name, but he's an optometrist. He's 82 years old. He's in good health. And he's now really worried that he's going to live longer than his money. Now, he's done everything right. I mean, he's an optometrist. He's worked hard, he's saved, he's invested. And now at the age of 82, he's worried that he's too healthy because he's worried he's going to outlive his money. And that's what I call financially trapped. And so when you look at those stats, it's ridiculous. 100 of us start a race. No one wins the race because 100 of us start a race. 99 of us don't even finish the race. And that's when I just decided, no, it's got to be different. I'm going on a different path. And I did that from 25. So I went out and I read this book, Rich Dad, Poor Dad. I'm sure many of you have read this book. And, it talks a lot about the E quadrant, which is the employee, the S, the self-employed, the B, the business owner, and the I, the investor. We can go into it in more detail, but, that's not so much the purpose for tonight. But, the employee basically is all about hard work. The self-employed is all about hard work. It's 95% of the people on the planet. They've got less than 5% of the wealth, and it's a huge amount of stress. On the other side, you've got the business owner, and it's about passive income, and the investor. And the question we all should be asking ourselves is, how do we get to be the investor? How do we get to have the passive income? How do we get to have the freedom, basically? And that's when I basically had this paradigm shift, this epiphany moment was, what I call myth number one, because I thought I had to do it all on my own. I've got a plethora of books here about money and investing and whatever. And in my bookshelf downstairs, I've got probably another 400. I've done, all the degrees. I've got an honors degree, cum laude. I've got a master's degree from London, cum laude. I've, done PDP, which is the property development program, which is the top, course out of the business school. I've got CRS, which is certified residential specialist, which is the best out of America. I've got AIPP, which is the Association of International Property Professionals out of England, which is the best out of England. And I think you can get my point. Like, you name the course, you name the degree, you name the book, you name the mastermind. I went and did it all. And my logic was, well, I got to learn all this stuff. I want to be wealthy. I don't want to be like my dad. And then I had this epiphany moment that I didn't have to do it all myself. And hopefully tonight, you're gonna realize that, you know, there's kind of three types of people in the world. The first type of person wants to do it all themselves. The second type of person realizes that it's easier if they do it with others. And the third type of people are the people who just want to get results and are prepared to do whatever it takes and work with the best in the world to get those results. And you know, it's interesting because you're going to decide, but this was this massive epiphany moment I had from, you know, I need to do it all myself, which I tried to do for 14 years until I realized the quickest, simplest, and safest way was to get there through partnership. So if you look at where it all started, you know, that was me on my project when I was 13 years old. It's my first property project. I helped renovate the house. When I was 22, I did my first development in Cape Town, South Africa. We bought an old house and redeveloped it into 6 townhouses. When I was 24, we did our first property in London. We bought a 3-bedroom place and converted it into a 5-bedroom place. And I then started a company when I was 25 called International Property Solutions. And I helped thousands of people buy houses or apartments in South Africa, hundreds in England, hundreds in Australia, and hundreds in America. But what I realized is there was a massive problem for investors because most investors were limited to in-country. And then even then, to get access to international property or commercial property, there are massive barriers to entry. And that didn't even take into account the tax, the structuring, the compliance, and the complexity. And so what really I realized, if you look at the stats, 99% of people are not getting the results at the end of the day, but they're not investing like the top 1%. And for me, the correlation became obvious. If we want to get the results of the top 1%, we have to invest like the top 1%. And where this really started to dawn on me was when we had the crash in 2008, 2009. So this was in London, and Barratt Homes is one of the biggest developers in London. And they had this development, and we could literally buy 48 units in this development, and we could buy them at a discount of 40%, 8% cash on cash return, you know, positive income. It's an absolute no-brainer. If you're buying a property at a 40% discount, okay, and you got a cash flow positive income. If you look down the bottom here, I said, I don't care what happens with market values in the short term. This represents a real opportunity. And you know what was so interesting is that 48 units, to buy that, I needed 10 million pounds. I ran around, I had 2,500 investors. Do you think I could get people to work together? I just couldn't. And I was so frustrated because I couldn't get people to work together. And so I eventually went to Barratt Homes. I said, well, can I buy one myself? And they just laughed at me and literally laughed me out the room. And, you know, this was the beginning of the end for me because I was like, right, I can only do this through partnership. I can't do this on my own anymore. The second thing that happened to me, I was in Bondi Beach, Australia, Sydney, Australia, and there was this medical opportunity. And there were these 2 very wealthy people. And I said, listen, you know, what are you investing in? And, you know, I'm helping people buy houses and apartments. And they're like, no, medical. And I was like, why medical? And they said, well, think about it. No matter what happens in the world, people need doctors. Secondly, doctors never leave their premises. And thirdly, doctors are, you know, very good at being doctors, but they're not accountants. So they sign good long-term leases. And I was like, it's a no-brainer. Like, why wasn't I taught that in the very first week of property, you know, my property degree? Like, it should be 101, you know, property. Anyway, I tried to participate. And again, it was a $5 million minimum investment. I didn't have $5 million. So I ran around talking to my investors, same problem. And that really birthed a big enough problem in me to create Wealth Migrate. And we went out and we did our first commercial building in Atlanta. There were 82 investors from 5 different continents. And we bought 6 medical buildings in America, in Atlanta, $16 million deal back in 2014. So I've been doing this now, the commercial side of things, for just short of 10 years. And, you know, we've got quite a lot of traction now. You know, we've got members in 178 countries. We've facilitated over $1.3 billion in deals. And, you know, we've paid out over $30 million just in dividends and exits in terms of the process. So what I've learned is whether you invest in America, England, Europe, Australia, South Africa, I personally invested in all 5 of those in the last 10 years. You know, they've all got different markets, but one market is not necessarily better or worse than another market. And so when you ask investors, why do they diversify? I tend to find that there's a bunch of reasons, but the most important ones is preservation of wealth. You know, I want to preserve my capital. Secondly, I want to have a plan B. I don't want all my eggs in one basket. Thirdly, I want peace of mind. You know, I don't want to have to worry about, you know, my country or my economy. And lastly, it's freedom. It's that same story of my uncle who had the freedom to make the choices that he wanted for him and his family. So we live in fascinating times. You know, we've got the war in Ukraine, we've got inflation at 40-year highs, we've got interest rates rising all over the place, we've got fuel prices going up, we've got stock market, you know, all over the place crashing and volatility. And even in South Africa, we've got no electricity, which is, you know, creating a bunch of drama for all of us. And so what do we do in all this uncertainty? And what I find really interesting is that, you know, sometimes I sit here and I think to myself, sorry, I see this for water. And unfortunately, I'm showing my age now, but, you know, I think to myself, wow, we're in unique times. But we're actually really not. Because, you know, I've now witnessed this or experienced this twice. So in 2008, 2009, when we had the global financial crisis and the banks were going bankrupt and the insurance companies were going bankrupt, like it was chaos, okay? And yet there was so much opportunity. And 10 years before that, in 2001, you had September the 11th and the dot-com boom bust. And again, like it was chaos, and yet there was so much opportunity. And what most people don't remember is from South Africa, is that interest rates in 1998 went to, you know, 25%. And it was chaos. But then a couple of years after that, for a decade, there was like massive opportunity. So I started to learn and notice a pattern. And I started to say, well, and I learned this firstly from Ray Dalio, like what can we learn from history? What are the patterns? And that's where Diversification 5.0 came from. Because it was, well, if this happens every 10 years, and every 10 years, wealthy investors do the same thing, then surely if we map and track what they do, we can just copy them. So that's where the whole philosophy of Diversification 5.0 came from. And, you know, I've learned that there's a huge amount of things you can do, but there's actually only 5 things you need to do. And that's that you need to diversify across countries, currencies, assets, partners, and time. So what I also find really interesting is having done this now, I've been presenting live since 2004. And you'll be surprised how often people come up to me and they say, Scott, you know, I've been watching you for 10 years. I just wish I'd done something. You know, and so some of you might even recognize yourself in some of these rooms because I've presented all over the world in terms of this process. But, you know, my question is, what's the pain of not taking action? If you'd invested with us 10 years ago, the Rand was at 8 Rand 50, 9 Rand to the dollar. It's now at 19 Rand 50. Some, you know, it went over 20 Rand to the dollar. The property prices have doubled in price in dollars, and the Rand is more than, you know, halved. You know, what's the pain of inaction over a 10-year period? You know, I presented with Roger Hamilton, Brian Welsh. We've had dinners away on game farms for our top investors. And all of this was learning and sharing what was happening around the world. We've done events with Neil Peterson, Dr. Dolph DeRoos, Clem Sunter, and whether it was live events or webinars, you know, so many people, and I don't know the exact stat, but it's something ridiculous, like 95% of people that turn up to webinars or live events come and get the information, but they do nothing. And probably similar to me until 2010, I'd be like, oh, I've got lots of information. That's great. Let me go get some more information. Let me get some more information. Let me get some more information. But I don't actually do anything. And if you don't take action based on the information, it's a complete and utter waste of time. You might as well be watching Netflix. So, you know, my invitation to you is, if that's you, if you're one of those people, then maybe tonight you can make a commitment to rather be someone that's seen me before to someone that's actually, you know, made a commitment and is now actually, you know, implementing what they've learned. There's some fascinating research out there by Harvard that if, you know, in 3 months from now, if you just listen, you're only going to retain 10% of what you like hear tonight. If you kind of are shown and experience it, it's somewhere between sort of 32 to 65%. Okay, and if you actually do it in a non-directive way, like you actually do it yourself, then it's as high as, you know, up to 95%. And so, you know, really tonight, I encourage you, I'm going to literally download 24 years worth of knowledge into your head in less than 90 minutes. But if you want to retain it, you've got to go to the next level. And I'll give you some ways to make sure that you can do that in terms of the process. I also want to share with you tonight the pain of not taking action. So I got asked by someone, and I said, you know, Warren Buffett says the greatest investment you can make in your life is in yourself. And I said, well, if you were to invest $5,000 in yourself to create your future, you know, how much would you be prepared to invest in that? And the guy said, well, what's the ROI? What's the return on investment? So I went and worked it out. I said, well, you know, if you're getting, he told me he's making an average of 7% return a year. And I said, well, if I can get you an average of 14, 15% a year, and we take it over 10 years, the difference in money in today's terms, so the difference in money is $102,000, but if you take it in inflation terms, in today's terms, it's worth $57,000. And the question I would have is, would you pay $5,000 to get $57,000 back in today's money? And anyone that can understand maths would be like, well, if I invest 5 to get 50, like that's a no-brainer. And some would go, it sounds too good to be true. So immediately their minds will trigger off and go, there's no such thing as a get-rich-quick scheme. That's not what I'm saying. I'm saying that over 10 years, if you get access to the right information and the right partners, and you can get a better return than you can do on your own, this is the type of return on investment that investing in yourself will mean. So I will explain later what the mastermind is all about and how you can actually, arguably get access to those right information and those right partners so that you can get those type of results. But I want to go into the 5 important lessons that, having mapped the last couple of crashes that I've looked and as our team has worked on the research, that I believe there's 5 important things that we can learn. So it's trends, risk, diversification, structure, and team. Let's start with trends. So it's really interesting. So I was literally talking to James Painter today. He literally wrote chapter 2 of my book, all about currency and trends. I've worked with him for nearly 15 years, and he's all about forecasting. I like to describe him like the weatherman, or he describes himself like the weatherman. And, I don't know how the weatherman does it, but I know they look at patterns and they help me know tomorrow, is it going to be sunny? Is it going to be cold? Is it going to be raining? And then I can plan my life based on, are they 100% right? No, but they're a hell of a lot better than me guessing. So, what's interesting is that he did an analysis for our wealth hackers about a year ago. And he said the stock market could lose anywhere from 50 to 85% over the next 5 to 10 years. Now that's interesting. Like as an investor, you should really be looking at these trends, like what's happening with the stock market and commodities and currencies. And just by the way, for those of you that are part of Wealth Going Global or part of the mastermind, he's actually doing a live session for our group literally next week, which should be absolutely fascinating. I spent an hour with him planning it today. So when it comes to trends and trends analysis, the person that I have the most faith in worldwide around global economics is a guy called Ray Dalio. So I really recommend that you go and look up Ray Dalio. But what he's done, he's mapped back history for 500 years. And you can see on the left-hand side here, you've got growth. And at the bottom, you've got time. And then you've got productivity. And what he basically says is you've got the short-term debt cycle, which is 5 to 8 years. You've got the long-term debt cycle, which is 75 to 100 years. And, he talks a lot about it in his book, Principles. And also there's a lot of stuff on LinkedIn. And all of these patterns or changes are all intersecting over the next 10 years. So the short-term debt cycle, the long-term debt cycle, political and social instability, a change in the world order, it's all happening in the next 10 years. Now, as an investor, if you have no idea what I'm talking about, you really do need to understand it. I'm not being dramatic. It's critically important to truly understand. And so if you'd like the Ray Dalio recording, just literally type in there Ray, and we will share with you a way that you can actually get access to the Ray Dalio. Because what I did is I went and analyzed all of Ray Dalio's research, and in an hour and a half, I shared what all the trends are, how it all works. I mean, again, you can go read the book. It's 19 hours. You can go read all his LinkedIn stuff. I spent a couple of days and probably even a few weeks preparing and bringing it all together in a webinar. So if you'd like that short version, just type in there Ray, and we'll make sure that we share that with you in terms of that process. So if I look back at my own experience, back to trends, and literally, well, how many years ago was it now? 2008, 2009. The world was falling apart. Banks were going bankrupt. Barclays was going bankrupt. And I learned a lesson when it comes to trends that, a lot of people, if you take the London property market, the London market lost 20% in 1 year. And a lot of people are like, the world's falling apart. But actually, when you look at trends, it's about the long-term trend. It's about, the price and time, and about the long-term trend and the fundamentals of supply and demand and everything in between. So, I think it's really important that you understand trends and fundamentals in terms of the long term if you truly want to be able to get your results. I'll give you an example, a true life story. So this is a building called City Peninsula. And, a guy called Don and 31 other people bought apartments in this building. We managed to get them at a 26% discount. From 2011, when the building was delivered, they got a positive cash flow income every single year. He owned this building for 10 years, and then he sold it in 2021 for more than £1 million each. So he bought 4 units each for £313,000. And he sold them each for more than £1 million. Now, who here would like to buy an apartment for £313,000, earn a positive cash flow income for 10 years, and then after expenses, and then sell it for more than £1 million? You can see there's lots of people writing in their race, so we'll make sure you get that information. But yeah, I'm interested. Would anyone like that? Or you're going to sit and say, no, but it sounds too good to be true. And then people say to me, well, how do you do it? And it's actually not that difficult. There was an article that came out last year. Knight Dragon is investing £8.4 billion, $10 billion in the Greenwich Peninsula. There's 17,500 homes being built, 84,000 square meters of commercial and retail, 20,000 square meters of cultural attraction. It's right next to Canary Wharf, which is the new financial capital of London. It had a tube station being put in, and all that we did was look at all the research and help people invest, 10 years before the area really took off, which is why they, saw such growth basically in terms of that process. Another great example was Ryan. Ryan came to us in 2009. He bought 5 houses in Australia. Australia was the best performing market in the G20. So that's the top 20 countries in the world. In 2009, 2010, he bought 3 and 4 bedroom homes in the suburbs. They were the best performing assets over those years. And 5 years later, he actually immigrated to Australia and now lives on the Gold Coast. So again, getting the right information and the right partners. Michael Honeysett came on a buyer's trip literally 10 years ago, February 2013. And it was so interesting because in those days you had to pay 20,000 Rand to come on a buyer's trip. And he wanted to negotiate. He said, no, I don't trust you. And it doesn't, I'm not so sure. But I'll tell you what, I'll come to America on a buyer's trip with you. Anyway, he ended up, being very clear on the trip, which I love people who are clear on what they want. And he said, I want to make sure that I build enough passive income to give my daughters the freedom to be able to live where they want and to do what work they want. He's from Durban, South Africa. And I'm super grateful that 10 years later, him and his family are immigrating to England. His daughters, are fully educated in what they want, and they can live and work wherever they want. And interesting enough, Michael said 10 years later, that 20,000 Rand that he invested, to be part of the buyer's trip, and obviously he still had to pay for his whole buyer's trip and everything in between. But he said, when I joined, it was the best money I ever spent. And I often say to people, how much would you invest in yourself to be able to get the results? And a lot of people say, oh, but I'd love to be like Michael, 10 years later. Oh, it was so easy for Michael. Well, why was it? Hundreds of people came and saw the presentation Michael saw. Hundreds of people saw us talking about America 11 years ago. Hundreds, thousands of people have seen webinars with James Painter about currency and whatever. And, Michael invested at 9.50 Rand to the dollar 10 years ago. And, now it's at 19. But that's why he's got the freedom to make these decisions. And so my question to you is, where will you be in 10 years? And what decisions are you making for your future self? Because there's no point in crying about 10 years ago. But what we can do is learn from the present in terms of where we're at. And, like Michael did, you have to invest in yourself if you want to get access to the right information and the right partners. A good example here, and again on Wealth Going Global, which is the upgrade of Property Going Global, I've actually shared how you can go and get all the research. So if you look here, we started investing in Australia at this point of the market. We started investing in England at this point. We stopped and we started again about here in the English market. And America, we literally started investing within 3 months of the bottom of the market. So, people could say, oh, well, you're lucky. Yeah, maybe if you get it right once, maybe twice, but if you do it consistently, I think we can agree that, it's because you got the access to the right research, the right fundamentals. And that's really why Clem Santa endorsed the book, was because of the models and the fundamentals and the 4-dimensional model I built. So I'm super excited to be sharing this at the moment with the team from Wealth, that are part of Wealth Going Global. And when you look at the returns, just an example, if we take the last 10 years, we've consistently got a return of about 14%. So about 8% of that, 7 to 8% of that is cash on cash income, and the rest is capital growth. But somewhere between 13 to 15% total return, IRR, which means you've got a return of about 14%. So this is an example of long-term trends in terms of what is actually happening. In terms of a synopsis of the market conditions, if you were to look at the long-term trends of what's happening in 2023 and the year beyond, you can go and look at all these reports. Like, these are all the top banks in the world. But again, for me, like, I don't have the time. I don't know about you. I don't have the time to go read all these reports. So I always try to go to source. Like, where can I get access to the best information? And so, I work with a family office, and a lot of people don't know what a family office is. So I just want to explain what it is. But a family office is a private wealth management firm established by ultra high net worth families that provide families with a selection of personalized services that include investment management, financial planning, estate and tax planning, philanthropic investing, concierge, and more. In the old days, you needed $250 million to have your own family office. But what's really interesting is, like, for our top investors and part of our mastermind, we literally work with our own family office, and this is their asset allocation. And what they do is they literally look, and have done, as far back as 2008. And every month we look at what's happening with the assets. Are they going up? Which asset classes should we be in? And this is a classic example of, like, you can go and do all the research yourself, or you can just go straight to people that are already helping the wealthiest people do it in terms of that process. So it's a classic example of trend analysis. And, if you look here, you can actually see, if you follow greens as an example, you can see how they go down and then they go up. And, there's definite trends here. Do you want to be investing in something like commodities in 2022 that are top of the market? No, of course you don't, because it's at the top of the market. Like, the chances of it continuing there are quite small. So you've got to be following the trends and knowing what's going on. Right. Lesson number 2, risk. So I learned this the personal way, actually. So in 2008, Barclays Bank was going bankrupt, well, supposedly. And I phoned my uncle and I said, Bill, what are you doing? His money was in Barclays. And he said, he's putting his money in Coca-Cola. And I was like, really? Why Coca-Cola? And he said, well, think about it, Scott. They're in over 100 countries around the world. They've got multiple products. They pay very good income or dividends. And I was like, wow, that's really interesting. And then I read a book by Warren Buffett, and it was all called Snowball. And it was how Warren Buffett owns 15% of Coca-Cola. And it's exactly the same thing. It was all about income. And what I realized, and then I studied my own personal stories, was that most people, most middle class and professional people, are chasing capital growth. Whether they're buying the stock market or crypto or Bitcoin, or trying to get the next best thing because they're going to double their money tomorrow morning. What are some of the ones? Crypto arbitrage and day trading and currency arbitrage and all these things that I hear about all the time. But when I look at it, the wealthiest people manage risk by income. And it reminds me of a story in 2002. It was just after September the 11th. And my friends, my friend and I wanted to buy a house, and all my friends said we're absolutely crazy. England was going to war with Afghanistan. Oil prices were going up. Inflation was expected to go up. Interest rates were expected to go up. And I said to them, well, what's interesting? Let's buy this 3-bedroom house. Let's put a conservatory on. By doing that, we turn it into a 5-bedroom house, and it'll be, cash flow positive. And so we literally rode that storm completely. And what was interesting, even when the crash happened in 2008 and 2009, we rode that storm. But my mates that went and bought nice, fancy off-plan developments, 1- and 2-bedroom apartments, they were the ones that completely saw their ass, because they were going after capital growth, not income. And so they're completely susceptible to the ebbs and flows of the market. Whereas if you're going income, you just go steady Eddie with where the market is going. And it was exactly the same with medical. When I started investigating America from 2010, the residential market was all over the place. I mean, some places like Vegas lost 70% of their value, but medical buildings just kept paying all the way through the last crash. Now, interesting enough, in the latest crash, that's not the truth anymore. So again, I learned a hard lesson here, because for 10 years I stood on stage going medical is bulletproof, and it's not. Because what happened is you had COVID, all the elective surgeries got stopped. All our tenants in these medical buildings are the people who've helped the elective surgery, knee surgery, and all the people that do all the stuff around the knee surgery, whatever. Suddenly you have COVID, there's no knee surgery. And so a lot of these tenants, went out of business, and suddenly you weren't getting paid your income or your dividends. So again, I learned a hard lesson. No asset class is bulletproof. No country is bulletproof. No currency is bulletproof. No partners are bulletproof. And once again, Why do you have to diversify across all of them? So another good example was, if you take office buildings, I mean, they literally are being gutted, all over the world. Office is in big problems, particularly in big cities. Something like in San Francisco, 25% vacancies, which is incredible in the office space. And that includes with the tech, industry going down. And yet in places like Tampa, Florida, and in Texas, Austin, Texas, there's been this huge influx of people and business. And, particularly, they need access to offices. So we've got a partner there that's worth $3 billion, has been in business 42 years. And they literally have done exceptionally well through COVID in terms of returns. So, when you look at trends and risk, it ultimately comes down to income and managing that income through the good and the bad times. A good story is Hilda. She started investing in 2013. Started investing in commercial buildings with us overseas. She built up a globally diversified passive income. It enabled her to come to Necker Island. This was me and her in Necker Island. We spent a week with Richard Branson on his private island, and her buildings actually paid for that for her. And then in 2018, 2019, she immigrated to America and now lives very happily in Texas. But it all started by her building a portfolio 10 years ago in terms of that process. We come on to the third lesson, diversification. Now, it's interesting because according to Ray Dalio, the single most important component to financial success is drumbeat. And by the way, this man manages $160 billion, and you need $100 million in cash to be able to invest with him. He's got this book, Principles, that I'd highly recommend. But he literally says the single most important component to financial success is diversification. You have to diversify across assets, within assets, across markets and currencies, and across time. And what was interesting, and I share this in the Wealth Going Global course, but he never shared his secret formula. And he basically has earned a return of 21% a year on average for 40 years. Now, that's phenomenal. 21% a year on average for 40 years. That's why he's got the biggest hedge fund in the world, because he gets those results. And at the age of 75, he finally shared his secret formula. And people were expecting this massively complicated formula. But actually, all that it was you need 15 uncorrelated bets that don't move in tandem. That's all it is. If you read this on the screen here, it sounds a lot more complicated. You need 15 uncorrelated bets, an attractive array of assets that don't move in tandem, and that'll reduce the risk by 80% and increase the risk-return ratio by a factor of 5. It all sounds like gobbledygook. All he is basically saying is you need 15 quality investments that don't move in tandem. That's it. If you do that, you'll reduce your risk by 80% and you'll increase your risk-return ratio by a factor of 5. Now, I don't know anyone on this webinar, and I'd be very, very surprised if anyone on this webinar does not want to reduce their risk by 80%, increase their return by a factor of 5, and copy a formula from someone that's got 21% return for the last 40 years on average per year. If you would like to follow this strategy, just type in the word yes. Reduce your risk by 80%, increase your risk-return ratio by a factor of 5, and aim to get a 21% return year on year for 40 years. Now, I don't see any yeses, so maybe I should just go home and go to bed, because when I finally figured this out, it was like, really? That doesn't sound that complicated. So I can see there's a bunch of people putting in yes. So I'm glad that I'm at least stimulating your minds to be thinking, because what I learned from Tony Robbins in 2010, and maybe even before that, I can't remember exactly when it was, the most easy way to be successful is to copy a successful person. The easiest way to be wealthy is to copy a wealthy person. I believe actually, and I've engineered that a bit further, I think the easiest way to be wealthy is to invest with a wealthy person, like to partner with a wealthy person. You don't even have to learn from them or copy them. You can literally partner with them now. But, my philosophy is he's telling you how to do it. He's done it for 40 years. He's the most successful investor, one of the most successful investors in the world. Why would we not just copy him?
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So that was actually a TED talk, and they were interviewing him, and he said, what do normal people like us do? And he said, well, diversify well in a well-balanced way. Know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the most important thing. And I think it's pretty self-explanatory. But I want to take some of the mistakes that I see people make. So the number one mistake is that they go out and they buy a house. And interesting enough, one of the professionals I know went to his financial planner, and he owns a house in South Africa. And his financial planner said, no, the best thing you must do is pay off your house first. And I'm like, but that makes no sense. Because since 1975, the Rand has lost statistically 6% a year on year for 40 odd years. Like, it doesn't make any long-term sense. And what was really interesting is that, then I meet investors and they're like, oh, but I'm going to go buy apartments. And I'm like, why are you buying apartments? No, because I get great capital growth. And I'm like, but that property costs you every single month. Trust me, I know, I own 16 of them. They cost you every single month. The rents don't cover the mortgage, plus the rates and taxes, plus the management fees and the maintenance and all the drama and the headaches and everything in between. And then the capital growth, you think, oh, I'm a hero. But actually, when you work it all out, you barely made any money in real terms. And so that's why we talk about the Global Wealth Index, because for me, people think they've made money, but actually you need to track it. And, I did the research in my book. It's called The Basket of Goods, a Global Wealth Index. And the Rand has lost 29%. That's our wealth has declined by that amount every year for the last 30 odd years. Now, I want to give you an example of this. So this was the house that I owned on Teeson Island in Knysna. I bought it in 2013, August 2013. It was a beautiful house. And don't get me wrong, it was a lovely home. And we sold it this year. And it was interesting because we bought it for 5.5 and we sold it for 14. And on paper, people are like, wow, that's an incredible return. Like, you've done really well in less than 10 years. You've more than doubled your money. But I'm the type of guy that, like, I want to go and look at stuff. I want to analyze stuff. So I went and did the research. And what was really interesting is, I bought the property for 5.5 million Rand and I sold it for 14. I did all the maths. And what was interesting is the return on investment was 161%. So, on paper in Rand terms, like, I look like an absolute hero. And then I went and did the maths even further. And if you put it into dollar terms, can you believe that I actually lost $30,000? So if I'd taken the exact same amount of money and just put it into dollars in 2013, I'd be $30,000 better off. And what's really scary is that if I'd invested that money and put it into a commercial building in America and just earned an average 8% return, I'd have 3 times more money in dollar terms. 3 times. And that's when it really hit me. I had one gentleman join the mastermind last month. He was about to buy an industrial building in PE. And when he heard that story, he was like, oh, hang on, maybe I need to do the maths here. Because we think we're making money until we do the analysis. I thought I was a hero with that house. And then I did the analysis and I'd actually lost money in real terms. Mistake number 2. I'm going to diversify. I'm going to go to London and buy an apartment. I buy one apartment with one mortgage and one management agent. So yes, I'm diversified out of one country, but I'm still in the same asset class. And literally, I got all my eggs in one basket. If my one tenant stops paying, I'm in deep, deep trouble. All my eggs in one basket. What about mistake number 3? All my money with one partner. Now, don't get me wrong, Wealth Migrate is a platform that's got many partners, but this is where you go to one partner that's in one asset class, one country or one currency. And this gentleman here invested with one company in 8 hospitals in America, and not a single one of them is paying a dividend at the moment. I told you, like depending on medical, you've got to be very careful. There's one South African company that's taken an absolute hiding, and 8 of their properties are not playing, portfolios are not paying at the moment. And when I look at it, it's one company, one partner, one income stream, one asset class, one country, and one currency. So they think they're diversified. There are 8 hospitals in America. They're really not. And the best analogy is like maybe they got 8 eggs and it's in one basket, but it's been carried by one partner. And if that partner falls over, all 8 eggs, break. So that's why we call it Diversification 5.0. And, when I look at last year, I personally invested in 10 assets, 4 different continents, 5 different currencies, 9 different asset classes, and with 10 different partners. And that's what we call Diversification 5.0. And what I tend to do and what I love doing is working with high-end people and kind of building portfolios for them. And, this was a portfolio we built for someone with $100,000, and we built them a blended return of 15.5%. And I showed them the different scenarios. It's called scenario planning. You can go and look at the different scenarios. If I invest here, if I keep my money in South Africa, if I put all my money in London, if I put all my money in America, whatever, what are the different scenarios and what can I achieve basically? So a great example of this is Chad. Chad started investing with us in Australia in 2011. He then went into America with us in 2012, 2013. I don't know exactly when. He still lives in South Africa, but he's built a globally diversified income. He's actually even created a company now that does structured notes, that if you don't know what they are, they're also a phenomenal investment asset class. And, we've been helping people with him fractionalize those so people can get access to them. So classic example of someone, again, a 10-year story, getting the information, getting the partners, taking action and getting the results. So, when it comes to portfolio construction, I wanted to play you a quick video here, which was our family office, and they were talking to our mastermind group around portfolio construction. And listen to how important your portfolio construction is.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return and is the fundamental building blocks of asset management and a financial plan that's going to, produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
So to Annie and a couple of people who've asked questions, I'll come back and I'll answer questions just now in terms of real terms. But I'll just answer your question very quickly, Annie, because I think it's important. I like to compare an apple and apple. If I bought that property in rands, I went to the exact day I bought it, the exchange rate, the exact exchange rate that I bought it at. I then took into account, inflation and then when I sold, I took into account what the exchange rate was, and literally real terms takes into account inflation, and like it's comparing a dollar for a dollar. And that's why I found fascinating. In rand, I look like a hero, but in dollars, I lost money. So let's come back to asset allocation. And what he literally said there is portfolio construction is worth 85% of your long-term returns. 85%. So again, that's why the wealthiest people have family offices, because they do portfolio construction. Do you do portfolio construction? 85%. And if you don't, where can you get the information from the partners so that you do portfolio construction? Because you need to be doing portfolio construction. Some examples of this, most of us are not even in private equity. And if you take the stock market compared to private equity has outperformed the stock market over a 5-year period, 10-year period, 15-year period, and 20-year period. And by the way, with less risk. And yet most people don't even know what private equity is. When you take this into account and returns here, on the left-hand side, you got return, and on the bottom, you got risk. So it goes from, low return to high return, and then low risk to high risk. So you want to be in the top left corner because it's basically high return, low risk. And yet the majority of you are sitting here with most of your money in bonds and stocks. So you've got the highest risk with the lowest return. Portfolio construction. When you look at returns, this was by JP Morgan. If you take the REITs, Real Estate Investment Trust, they've earned about 11% over the last 20 years. The stock market, or the S&P 500, which are the top 500 companies, about 9.5% per year. And then, you and I, the average investor that tries to do it ourselves, 3.6%. And so, like, for me, this is why this return on investment becomes so valuable. And if you want to, I can come back to this a little bit later, but you should be able to see the numbers on my screen. What I was basically trying to say was, if you've got $12,000, okay, so whether you invest $1,000 a month or you've got $12,000 or more in capital to invest, if you were to invest $5,000 in yourself, so you literally want to, make an investment in yourself of $5,000. If you're doing it over 1 year, it doesn't really make sense because the future value is only $441. But if you're doing it over 5 years, you're gonna invest $5,000 to make $12,000, which is a no-brainer in today's money. So that's taking into account inflation. If you do it over 10 years, you're investing $5,000 to make $50,000 plus in today's money. It's a no-brainer. It's a 10x investment. And if you're doing it over 30 years, you're investing $5,000 to make nearly $1 million. Now, I know this sounds too good to be true, but this is the power of compounding. This is the power of you trying to do it on your own and earning a paltry 7% versus getting an average of 13, 14, 15%, and the impact that it has over time. And then I ask just, myself the question, I can try and do it all on my own, all the hardship and the pain and everything else, or I can partner with someone. I can invest in them because you need to pay for people's skills, but you invest in them, you get access to the right information, the right partners, and the return on investment is material over time. Number 4, structure. So tax planning and structure planning. So I know a lot of people get confused with this. I had one lady come to me and say, I was so worried about the offshore structure that I had 20 million rand and I had, got it 6 years ago. My dad died. It was an inheritance and I've done nothing with it. I was like, what? 6 years ago, the rand was at between 12 and 14 rand to the dollar. It's now sitting in nearly 20 rand to the dollar. And you've done nothing because you were worried about tax. It's retarded. So, you've got to go and get, again, the right partners to make the right decisions. And that's why, for me, myth number 10, a lot of people think, oh, well, I'll go to a cheap little island like the Seychelles or, sometimes even Mauritius, Isle of Man, whatever. But you've got to know what your long-term plan is. And that's why we work with our family office, because rather than being stuck in a box, it's like, no, this is my long-term plan. This is my long-term goal. I need a strategy and I need a structure to be able to help me with that. And a good example of this, a guy called Manu, he was an investor. He sold his business. He started investing. And when he first did it, he got defrauded $250,000, $250,000. And then he found wealth migrating and he started investing and he actually became a shareholder. And, I often say to people, do you think Manu would have paid $5,000 to avoid losing $250,000? So sometimes it's not what you make, but it's what you save in saving on costs and time and effort and energy and hassle. So I'd be surprised if you're not feeling a little bit overwhelmed. Okay, it's a lot of information, a huge amount of stuff that I'm sharing with you. And I do find it really hard. 24 years worth of knowledge. I'm excited and I like to share lots of information. So, often I get blamed for, it feels like it's drinking from a fire hose. And so I've got a question for you. With your permission, we started this evening where I asked you 2 questions. I said, what would it mean to you in 12 months or less to be earning at least $5,000 passive income without any hassle or complexity? That's what I asked you an hour ago. And secondly, how would you like a system which will statistically help you get there 5 times faster, safer, and simpler? So they were 2 questions that I asked you up front. Now I've got a question for you. What about if I could make you an offer where I could literally, show you how to do this safely and simply over the next 12 months? Would you give me permission to share it with you? Because again, you've got 2 options or 3 options. You can try and do it all on your own. I tried to do it for 14 years. Trust me, it's difficult, it's hard, you waste a lot of money, and there's a huge amount of frustration. But there'll probably still be a large proportion of people here tonight that will decide to still do it themselves. Then you can do it in a group, something like, the Wealth Going Global group or the Wealth Hackers, where you're working with a like-minded group and you've got a better chance of success. or you can, work in a one-to-one sort of mastermind environment, and you've got a 5 times, quicker, safer, and simpler chance of getting there. Can I share it with you, please? Would you like me to share you with how that system works? Yes or no? If you don't say yes, I'll shut up and go to bed. I know how it works. I've been doing it for myself and for lots of other people. So, okay. So thank you, Niels. Thank you, Salim. Thank you, Tapeso. Nilesh. Okay, cool. So let me share it with you quickly. I appreciate people engaging. So we started off with living a life unlimited. It's all about the freedom of choice. How do we do it? It's about diversification. The formula, it's a simple formula. You diversify across countries, currencies, assets, partners, and time. And the freedom is all, created by creating passive income in the middle. It's all about globally diversified passive income. If you want globally diversified passive income, then I'd recommend you keep listening. If you're not interested in globally diversified passive income, then probably it's time to go and watch Netflix or something.
No, this is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So when you get a group of people with a leader that's committed and wants to get in the trenches with them, suddenly you see real, rapid life transformation. So again, who wants real, rapid life transformation? And that's why we created the mastermind. Literally, I've been part of mastermind since 2010. And again, the statistics, according to Harvard, are that you get your results 5 times faster than if you try and do it on your own. And even if you have a one-to-one coach. So, why did we create the mastermind and who is it for? Well, it's for people that are into personal development. So we've got an awesome group of people part of the mastermind. All of them are coachable and into personal development. There's those people out there that know everything and no disrespect, but I can't help them because they know everything already. Passive income. So this is not about trying to, buy crypto and sell it or, buy a house and flip it. This is about passive income. If people are interested in passive income, and I want to work with people that are committed to at least $5,000 in passive income that they want for themselves. And then lastly, someone that, is an investor or property, like this is not a kind of a beginner's course. It's people that are, got started and understand it. They know what rates and taxes are, et cetera. So I want to work with people that are, really got the, some experience. So lastly, I want to work with people that, someone like me, no matter what I do, I always want to go to the top of the mountain as quickly as possible. Like I want to pay, I like to put myself in the room where I'm the dumbest, poorest person, because it means that I'm going to grow much faster. So I surround myself. I like to be uncomfortable because then I'm going to go a lot faster. So for me, people that want to get results, they often are time poor. Time is their most valuable asset. They've generally got, some money. And the point being is that like they want to get results quicker. Like, why did I go to Necker Island and spend time with 25 of the most successful businessmen on the planet? Well, because if I go to that environment, like there's only one way to go. But it costs money. You have to invest in yourself. So it's people that like to get fast results, but they want to do it simply and safely. And by the way, with very little hassle and complexity, because most of us don't want more hassle and complexity in our lives. Who's it not for? It's not for complete beginners. It's not for people that are just starting out. It's not for time wasters. So people that can't show up on time and are not sort of have self-control. Not for people with no capital. Like again, there's other things you can go to the university to get started, but this is not not for that. And it's not for difficult personalities. Like you and I have to work together one-to-one in terms of the process. So I like to have fun. You might have picked that up in terms of it. So this is the journey we're going on. That's what we are achieving over the 12-month period. And it's all about diversified global passive income. So when you take this journey and how do we do it, it's got a 5-step process. I sit with you one-to-one. and we literally get very clear on your outcomes. What do you want to achieve over the next 12 months? Then we figure out your starting point. Where are you at? What is your starting point? Then we get your wealth plan done. Where do you actually want to be? So you know where you are, you know where you want to get to, and you have a plan from A to B. And then it's all about the execution and the results. And there's two things here, and I'll go into them in a little bit more detail, but you've got the accountability on the mindset on the one side, and then you've got the financial and the investment on the other side. So if I go into that a little bit more detail and the outcomes, basically I sit with you, I'm a qualified certified coach, and we basically do a 90-minute one-to-one session, and we get very clear on your top 3 outcomes, your top 3 measures, and you literally write them down. There's so much power and clarity. I was doing a session with a lady today in Auckland, and it's interesting because she's like, wow, like it's so simple. I said, yes, but no one does it. No one puts 2 hours of their life aside to get very clear on what they want to achieve over the next 12 months and writes it down. And most people in life are kind of caught up in this problem and drama. And that's why for us, it's all about getting clear on the outcome. We call it the lighthouse approach. And, there was this coach in Germany. He's been helping people do this for 27 years, and he's now part of the mastermind. And he literally said it was a wonderful process. Then we do the starting point, and this is where we analyze your property portfolio. Plus, we work with our own family office. So we work with Callio Capital, a guy by the name of Garth Wellman. And why is he prepared to work with us? So, I've worked with him for 10 years with our wealthiest investors. And he said, the 1% can pay for advice and get results. We need to support everyone else to get the same advice and results. And so they committed that anyone that was part of the mastermind would get access to the same information and the same partners so that they could get the same results. So I think that's super exciting. Like, this is something I've never been able to do, is to help people be able to get access to a family office. And now through the mastermind, we can. Then we create the wealth plan, which is your plan. It's what is your plan over the next 5-10 years to get from A to B. Like I said to you, there's no get rich quick scheme, but the clarity when you've got a plan is so powerful in terms of this process. And then it's about the execution and the results. I mean, how many people have a plan and don't actually do the plan? Their stats are amazing. 9 to 12% of people keep their New Year's resolutions, and only 4%, if they're not written down. And, so this is like a science. It's not my opinion. There's a science to this. And so most people are kind of, particularly in where the world is at the moment and in South Africa, wherever you are in the world, people tend to find themselves in a away state, withdrawn, fearful, inability to make good choices, demotivated. You've got to put yourself in a toward state, happy, ability to think clearly, creative, see new opportunities. And the only way to do that is to put yourself in a like-minded group of people that are going in a positive direction. So how do you get those results? It's all about the mindset. We run a 12-month mastermind. We've got different courses on time management, on mental wealth, on flow. But most importantly, if I look at results, it's about accountability. So we've got an accountability tracker. We manage what people are doing every month, checking in to make sure that they're getting results. We've got an accountability coach. And 99% of individuals that have a coach actually report them to be helpful. So 95%, report them to be very helpful, and 96% reported them that they would use them again. So I joke, but some people have said to me, Scott, one of the reasons I joined the mastermind is I've listened to you for 10 years and I need someone with a big stick to get me to actually get results, and that for me is, whether it's the carrot or the stick. But for me, what I'm passionate about is helping people get results. And then the last equation is the investment side. And that's where we run a rhythm. Every single month, we do a financial understanding. So we take one of the asset classes. We've done 5 of the major asset classes around the world. Next week, actually, we've got a session with Fiona, that was the head of Knight Frank, literally out of head office in London. She's going to be running through the Australian market and one of the, the newest, most exciting asset classes, which is co-living. A couple of months ago, we did multifamily, which was the best performing asset class in America over the last 10 years on a risk-adjusted return. We've done medical. We've done structured notes that, can earn you anywhere from a 10 to 14% return in dollars or pounds, or euros. I know it sounds too good to be true. That's why you got to learn about these asset classes. Then we do market and currency analysis. So what's happening in the market? Again, I'm not interested in reading thousands of reports. So we do a TED talk once a month so that you just know what's happening in the global markets and currency as well. Then it's about portfolio construction and which assets should we be looking at and where is the world going. And then it's all about the investments, getting access. Our masterminders at the moment and myself are investing in an exclusive deal, where it's only available to the mastermind community. And then finally, it's about review and tracking the progress and looking at, your results, budgets to actuals. So that's the process. It is pretty simple. And I've learned one thing, there's a beautiful saying that the ultimate sophistication is simplicity. So although there's only 5 steps, I've learned that having done this for 24 years, that's where the power comes in. 5 steps. And then after a year, you return to step 1 and you just keep repeating the process over and over again. And that's how you'll get your results over time, over life. So again, you've got a choice. You can do it all yourself, and 3 months from now, you won't even remember 10% of this. You can do it in a larger group, a couple of 100 people. You kind of got a 30 to 60% chance, or you can do it in a small mastermind where you're literally doing it yourself. And there you've got a 95% chance of success in terms of that process. So just a couple of other priorities that we offer to our mastermind. You've got access to me and the team. You've got access to our tax and currency partners. We've got some extra bonus material that you can literally go back into the library, and we call it asset class mastery. You can literally go and you can learn about structured notes. You can learn about multifamily, medical, and industrial we did last month. So it's really, really awesome in terms of this process. So all of the different processes. You've got access to the wealth hackers. So this is the substance and all the different opportunities. You'll also have free access to Wealth Going Global. So when you're part of the mastermind, you get access to everything for free in terms of the process. And there's a huge amount of content and stuff that you get with the wealth hackers. And again, I don't want to overwhelm people. Generally most people join the mastermind because time is their most valuable resource. So it's actually not a lot of work. We're actually condensing, decades into days and hours into minutes. So for me, it's making it as condensed as possible, but giving you, the right information in the shortest amount of time, but also having the substance behind it so that you can learn should you want. Access to the best immigration people. I've helped people immigrate all over the world. And then, interesting enough, just today, I got asked again to start doing buyers trips again. So, I've been doing them for 15 years now, where I take you to London and go, to show you property, take you to Australia, show you property, take you to America, show you property. So I don't know, it's something, but it's something we should probably start again. How do you apply? Well, if you're interested, I would go to this link, diversificationmastermind.com. My partner Shane has kindly put it in the chat box. It's basically a simple call. It's a 30-minute call. It's an application call. It's one-to-one. I do it with you. The mastermind is a one-to-one environment. It's me and you. And so it's an application call. It's 30 minutes long. And I literally want to understand what you're trying to achieve. There's 2 purposes of the call. The first one is I want to understand what you're trying to achieve. And then I want to see if we can help you. It's whether you qualify. It's by invite only. And so I want to identify your risks. I want to understand where you're at. What are you trying to achieve? What are your needs? And I want to explain, in more detail what the mastermind is, and then we can make a decision as to whether there's a fit. And if you qualify, then I invite people. About 1 in 3 people actually qualify. But you won't know, I won't know without setting up that call. So if you're interested, go along to diversificationmastermind.com. My one request is that I only want to work with people that are committed. So my time is very valuable. So is your time. Half an hour of my life is important. And particularly if I book a time slot, I expect both of us to turn up on time and to be able to engage and talk. It really irritates me when people don't turn up or they're late, because, it's very disrespectful. So for me, basically, it's a commitment, and I want to work with people that are committed. And that's why we do the interview, because I want to make sure that we're dealing with people that want to get results, are action takers, and we're also going to respect each other's time in terms of that process. So that's the only criteria in terms of booking that call, is that we do it. I know there's some time slots available tomorrow afternoon. I'm busy in the morning, but I've got some time slots available tomorrow afternoon. So yeah, if you want to book it, it is on a first come, first served basis. The time constraint I've got is I can only onboard 5 people a month based on my capacity and Callio's capacity. This 4 to 6 week period, I'm actually launching Wealth Going Global. I'm doing the events next week with James Painter and with Clem Sunter. So I'm really, really snowed under. So I don't even have the capacity to onboard 5 people in the next month. So we've only actually got 2 slots available. So if it is something that resonates with you, I would highly recommend that you jump on the call sooner rather than later. We are literally having that session our monthly session next week with Fiona, who, as I said, was the head of Knight Frank, which is one of the biggest institutions in the world when it comes to real estate. And she actually ran the wealth report. So I don't think there's really anyone else in the world that you can get access to that's going to have better knowledge in terms of what's happening around the markets at the moment globally. And so I'm super excited for that for our masterminders. And if it is something of interest to you, I'd highly recommend you and I have a one-to-one chat tomorrow, or let the team know if there's not a slot that suits you tomorrow, and we'll need to find time on Friday or Monday. But I would highly recommend that you get involved before next Wednesday, because it's not something you want to miss. And if you're already part of the mastermind, we've got a hell of an exciting week next week. We've got James Painter, we've got this lady Fiona, and we got Clem Sunter all lined up for next week. So I hope you're ready to learn from some of the best in the world, literally next week. And yeah, I think what's important, if people ask about return on investment, the average return on investment is 344% from coaching. And I always say to people, like, the best coaches in the world, the best people in the world, whether they're individuals, if you think of Andre Agassi or Tiger Woods or Serena Williams, or the best businesses in the world, or the best sports teams in the world, they all have coaches. Like, why would you not have a coach? If you're wanting to get globally diversified passive income, why would you not be part of an environment that's going to help you get there 5 times quicker, simpler, and safer? In terms of a satisfaction guarantee, for me, you might realize I'm 150% A-typer. I'm full on. And so, for me, it's all about trying to ensure that, he joked about jumping in the trenches, but, the one thing that I can hold myself to account is I'm going to do whatever it takes to get you the results. I can take you to water. I can hold your, head to the water, but I can't hold your head under the water. But I'm going to damnedest do my best to help you get those results. And so back to the return on investment, again, if you were to invest, $5,000 in yourself as an example, and, and equally you're investing $1,000 a month or had $12,000 in capital, literally, if you take a return on investment over 5 years, it's a 250% return on investment. If you did it over 10 years, it's 1,000% return, or, over $50,000. And if you do it over 30 years, it's a ridiculous return. It looks too big. It sounds too good to be true. But it's nearly $1 million. And, I say to myself, and again, I've done this many, many times myself, where, people go, I spent $50,000 for myself with Tony Robbins' Business Mastery. And my mom was like, you're absolutely mad. And I made that back 10 times in the next 12 months. So, often it's not what you can afford. It's also what you can not afford. So this is the link. If you want to go and book the call, it's diversificationmastermind.com. You can literally go and get access and set up a meeting. And I just wanted to share some pictures because, 10 years ago, the only way to get access to this information was to spend $2,000 to pay me $2,000, jump on a plane. You spend another $5,000 just, flying over to England or America, or Australia. And this was us in New York. This was us in Times Square. On the steps of Phoenix with Dr. Dolph DeRuis. Actually, this is the guy that wrote Real Estate Riches. This was 2011, 2012, when, it was chaos in America and you could buy all these properties on off the auction houses, off the steps of the courthouse. Having some fun in the Grand Canyon, drinking some beer down the bottom of the Grand Canyon, going to a show in Vegas, buying houses in Atlanta, buying different houses in America, looking at apartments in Florida, opening bank accounts in America. So yeah, this is the old way. This is how we used to have to do it. Learning from the partners. We would fly you over there. You would sit around a table. You'd learn directly from them. But 10 years ago, it took, $5,000, $10,000 up front, weeks and months worth of training. And now, you get to be able to do it virtually from anywhere in the world. And you get to learn and get the best information and the best partners from the comfort of your couch. So just having a bit of fun on Beale Street in Memphis, outside the stock market in New York, up in North Dakota, which is where the fracking is, and even having some fun on Oktoberfest. You might have learned already, I like to have fun in terms of the process. And just by the way, some of these gentlemen are some of the wealthiest investors in the country, in South Africa. They own some of the biggest shopping centers. They own about 180 shopping centers. And yet they came to America on our buyer's trip to get access to the right information and the right partners. People that know what they're doing know that they don't try and do it all themselves. And then why we believe you should work with us? Well, what I find really interesting is that there'll be a bunch of people going, it sounds too good to be true. And, I don't know how, and it's compliance, and I don't know if I've got enough money. But you know what's interesting? There's 3 myths that I think most people have. I don't have the time, I don't have the money, or I don't have the knowledge. If any one of those 3 things are coming up, I don't have the time, I don't have the money, I don't have the knowledge, you really have to interrogate yourself. Because if I don't have the time, well, the mastermind has been created to give you the time. It's been created to condense time so that you can get the result in the shortest time, simply and safely. If you don't have the money, I often say to people, well, what can you afford not to do? Like I've already said, and equally, there's other options that we've got available for people. And then finally, I don't have the knowledge. Well, how else are you going to get the knowledge by rather than working with the right information and the right partners? The other reason we believe that you should work with us is we're the only ones that can give you global diversification. I'm not aware of anyone else. Everyone else is an expert in America or an expert in England or expert in Australia. To my knowledge, we're the only people that are helping people diversify across countries, currencies, assets, partners, and time. So it's the only solution I'm aware of where you can truly follow Ray Dalio's formula in terms of that process. And then I sort of mentioned this already, but I spent $14,000 going to Singularity University, which is in Silicon Valley. I spent $25,000 with Roger Hamilton, that's the top entrepreneurial network in the world. I spent $40,000 to be part of Maverick. And because of that, I was able to go to Necker Island and spend time with Richard Branson for 2 weeks. I spent $50,000 with Tony Robbins and went to Business Mastery. So I've invested a huge amount of capital, hundreds of thousands of dollars in myself, which has allowed me to grow, a hell of a lot faster than average. And again, I always put myself in the room to be the dumbest, poorest person. And that's why we created the mastermind, because I realized, well, I'm doing this elsewhere. Why are we not doing a mastermind to help our top clients, get their results 5 times simpler, safer, and faster? I want to share with you the 5th lesson, and that's team. And what's interesting is that if you want to invest overseas and you want to diversify, there's traditionally only 2 ways of doing it. The first is that you go through the financial industry, you go to an advisor, the institution, you go into a REIT, and finally invest. But the problem is there's a huge amount of fees, a huge amount of layers. You don't even know what you're investing in, and it's very much tied to the stock market. Or you can go and invest directly in a buy of an apartment in London, but on average, there's 16 different middlemen between you and your investment, and it's hugely difficult, hugely problematic, and quite frankly, if you've ever done it, you'll actually know it's a huge amount of complexity and hassle. So if you want to do it yourself, this is all the stuff you need to look at. Country, due diligence, brokers, lawyers, tax, compliance, support, banks, secure data, deal tracking, family office, investor reporting, blah, 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 blah. Or you can look at 4 simple steps. Sign up, set up your account, browse and invest, and earn an income. So, again, do you want to use technology and make it easy, or do you want to try and do it all yourself in terms of the process? So, literally, we've spent millions and millions of dollars finding the right partners and the right information. Now, it reminds me of a parable called the 20-20-20 parable. It's really interesting. I was teaching someone this just today again. There's a couple that they're in America. They're in Venice, in St. Mark's Square in Venice, in Italy. And they're an American couple, and they're sipping there having some tea. And this painter comes up and he paints a picture. And it's a really good picture. And so they go up to him and they say, hey, can I buy the picture? And he says, yeah, no problem. It'll cost $20,000. And they're like, are you crazy? We just saw you paint the thing in 20 minutes. And he said, well, you're not paying for the 20 minutes it took me to paint the picture. You're paying for the 20 years it took me to paint it in 20 minutes. And I think it's a good, metaphor, because, again, you can go and do all this yourself, or you can literally save yourself decades. And I've probably learned a lot more of what not to do than what to do through all the mistakes I've made over the last, 24 years in terms of this process. Sonny, in terms of capital, like I said to you, even with $10,000 to $12,000, you'd be looking to 2x your money over a 5-year period. So I sort of say to people, anyone with $10,000 sort of plus, or anyone that wants to invest, somewhere between $500 and $1,000 a month for a year or two, then it makes sense. And again, if you own a house or a couple of houses, you'd be surprised what can be achieved in terms of rebalancing your portfolio. So, back to your key ROI. I mean, this is an example of a deal that we're actually investing in at the moment in Phoenix in America. It's a 7% cash on cash. It's got a 17% IRR, so that's a total return of 17% a year. It's a 3 to 5 year hold. If you put in $100,000, or even like $10,000, you'll aim to double that within a 5-year period. And so it's a 2x equity on multiple, and the ROI is roughly 20% a year. And this just gives you an example of the type of things. Not all the deals can go onto the platform. And so sometimes with the mastermind, we just do deals off platform in terms of the opportunities. So yeah, in terms of that process. And then finally, back to your team, how valuable would it be to have the likes of Callio as your family office, and, tax and structuring and inheritance and generational wealth and all of that stuff, and now can be taken care of, including portfolio construction, et cetera, et cetera, et cetera. So I'm super grateful that they're part of our partnership and our team in terms of the process. And a great example of this is Alan. Alan's a highly successful property investor in South Africa. And he came over on a buyer's trip more than 10 years ago. He partnered with us in all of our original deals, and he learned how to do it. And he invested, and he built a globally diversified passive income, and now he's immigrating to America. But he did it all through partnership and by basically partnering with a team that was already existing rather than trying to go create his whole own new team. So my question is, why not join 4,000 other investors? Whether you're looking for wealth protection, plan B, peace of mind, diversification, freedom, to be a global citizen, empowering your children, immigration. I've helped everyone achieve all of these things, but ultimately it's about living a life unlimited. Whatever it is important to you, it's about having that freedom of choice. And as I say, if we've helped thousands of other people, I'm sure we can help you. And so, my question to you is, if you're still here and watching, is wouldn't you like to be the next case study? Wouldn't you like me to be saying, hey, Sonia, came on in 2023 and she was watching this webinar and she took action, and now look at her results 10 years later. Because that's what it is. You notice I'm showing you people over a 5-10 year period, because that's what it takes. But the whole idea with the mastermind is to accelerate that process for people. So that's the formula. You can literally do it on your own if you want to, but copy Ray Dalio, 15 quality investments that you want to diversify across countries, currencies, assets, partners, and time. What's going to get you that freedom is your globally diversified passive income, which sits at the middle. The mastermind is the way to get there 5 times simpler, safer, and faster. You literally can decide to do it all on your own. I told you, I did this 14 years, a hell of a lot of pain, a hell of a lot of frustration. Or I could literally do it with someone. I could partner with them. I could invest in myself, and I could get there 5 times simpler, safer, and faster. And it was a geometric shift for me, from literally after 2010. That's the process. That's how it works. It's a 5-step process. Again, we get clear on your outcomes. We get very clear on what's your top 3 outcomes, what are your measures, and we write them down. It's the lighthouse approach, so it's all about the outcome. We then get clear on your starting point. We work on your property analysis as well as the family office in terms of the overall process. Then it's about building the wealth plan to get you from A to B. And then what's the most important part, because most people, don't even have steps 1 to 3, but even if you have up to step 3, the mastermind holds you accountable. It's about the rhythm on a monthly basis for 12 months, the mindset and the execution, making sure you stay in a towards state. It's the rhythm with the accountability and the accountability tracker and the accountability coach to hold you to get your results. And then finally, it's about the investment, and it's all about the investment understanding and how we put that all together. And there's 5 steps there. So, it's simple, it's time effective and time efficient, but it's a focus on getting results. And so that's it. That's the process. Again, statistically, if you try to do it on your own, you've got less than 10% chance of getting results. If this is something of interest to you, then I would highly recommend that you set up a one-to-one call. If you're wanting to look at the return on investment, like I said to you, $5,000 investment in yourself over 5 years is a 250% return. Over 10 years is over 1,000% return, or 10x. And over 30 years, it's a ridiculously large amount. And, it can actually equate to somewhere between $750,000 and $1 million. So, how important is it to you? And if you look at your future self, it's a no-brainer in terms of the bigger picture. So I can see Shane's put the link in there. Just go to Diversification Mastermind if you'd like to set up a one-to-one call. I'll remind you of the bonuses. You get priority access to me and the team. You get access to our vetted tax and currency partners. You get access to our asset mastery, which is the structured notes, the multifamily, the medical office. You get access to the whole wealth hackers. You get access to the immigration agents. And if we get the buyers trips going, you'll also get first access to that. And so that's the link. Go along. I don't know how many slots are left. As I said, there's a couple of slots that I've got available, or I had available tomorrow. I don't know if they've been booked. And if for some reason you can't get in or it's not working, just type in their mastermind and the team will get back to you in terms of setting up a call that's convenient for you and I. So if you are interested, just type in their mastermind and we will be able to assist you with that process. So I want to share some more pictures of the way, I call it the hard way of doing it, which we've done over the last 15 years. This was another group in Times Square, watching a bit of ice hockey, Madison Square Gardens, a guy outside the stock exchange in New York, buying commercial buildings in Texas, houses in, I don't even know where that is, Atlanta or Memphis, having some fun on one of the evenings, again, learning from partners. So you can see it's the same process over and over again. The right information, the right partners, getting people into the room in terms of that process. Watching a bullfight in Texas. This is one of the most beautiful buildings I bought. It was a gray overcast day, but it's the most beautiful building. I never ever thought I'd be able to own a building like this. Now again, did I own the whole building? No, I didn't. I only invested $10,000 in this building, but really, really interesting that I was able to get access to it. This was learning from Dr. Dolph DeRuis. So we were literally sitting we were buying a building, and it was the whole, doing the due diligence and everything. And this is a guy called Paul Shalandra, who we did 7 medical portfolios with, all of them highly successful in Atlanta. And Dr. Dolph DeRuis and him were doing an interview. Another building that we bought in America, a commercial building. This was us in Hong Kong. We were actually dealing with partners in Hong Kong at the time. And again, more buildings that we bought and invested in. So again, I notice, from a satisfaction perspective, if you remember that little video, it said someone that's prepared to jump in the trenches and help you get the results. And that's my guarantee, is that I'm here to do what it takes to help you get the results in terms of that process. I remind you of a bonus, and we did promise earlier for those that wrote in, Ray, we will also share with you a bonus where there's 6 videos on what is the synopsis for the market conditions in 2023. What should people be considering in 2023? What risks you need to be aware of? What determines 85% of your returns? What is private equity and how does it work? And what should be the overall strategy? And we'll actually literally share these videos for everyone. So if you're interested, just go to bonuses, diversificationmastermind.com/bonuses, and you're going to get access to all of those bonuses that I've shared with you tonight. So we really wanted you to walk away with value, whether you want to work with me or not, whether you can afford to work with me or not, that's a separate conversation. But no matter what happened, we value your time, and we wanted you to walk away with value, basically. I don't see the screen you're sharing. Yulia, if you look there, the link is diversificationmastermind.com/bonuses, or just click on the link. My partner Shane has kindly just shared it with everyone. So those that are interested, literally go to diversificationmastermind.com and book an application call. There are only 5 spots available. It is by invite only, and that's why I talk to people one-to-one. I want to make sure I can help you. I want to make sure I can get you results. I want to make sure you qualify. I want to share with you in more detail what we do, and then we can make a decision as to whether we can add value to you in terms of that process. I do also remind you that, we've launched this new book, Property Going Global. We're calling it Wealth Going Global, and it's a digital upgrade. So it's not just residential, but it's also commercial, and it's other alternative assets. So if you are interested, go along to that link below there, wealthuniversity.org/Wealth Going Global. We've got a group of about 50 people going through it at the moment, 55 to be exact. And maybe that's a good place for you to start if you don't think the mastermind is for you. So that's more of a way to get started and to build out some substance. So yeah, our whole objective is to be able to provide value depending on wherever you are in the value ladder. And I want to finish with a quote that I love. And it's, if you want to go fast, go alone. If you want to go far, go together. I've been doing this now for 24 years. I've never once bought a building on my own. I've only ever done it through partnership. And I fundamentally believe that it comes down to getting the right information and the right partners. For 14 years, I tried to do it all on my own. I thought, don't worry, I've just got to go read another course, or I've got to just go on read another book or come to another webinar. For 14 years, it was hassle, it was hard, I kept making mistakes. And then I had this epiphany moment, and I realized all I had to do was partner with someone that had already done it before. And so if you want to go fast, go alone, but you're going to make mistakes, and it's difficult and it's hard, particularly if you want to globally diversify. It's about, if you want to go far, it's about going together. And so that's our invitation. If it resonates with you, that's what the mastermind was created for. So thank you very much. There are my details if you want to WhatsApp me or email me. I really deeply appreciate Shane, my partner, setting everything up in terms of this overall process. And I remind you, there's this little video again that I think should play as to why we created a mastermind. Because if you feel like this has all been quite overwhelming, this is why we created the mastermind, to help you. Oh, why isn't it playing the video? Oh, my video is not playing. Oh, well. Anyway, let me go back to this page here. Yeah, that one. Anyway, we've got any questions? Let me see if I've got any questions here. If you are interested, so let me just see quickly where everyone's from. If you enjoyed it, please let us know. If there's things that we want to add value to, let us know. If you're interested in Clem Santa, let us know. Peter, thank you for the kind words about my dad. Is that people do not invest some of their monies even in retirement funds. I agreed with you, Louisa. Bunch of people that want to raise. So if you just want that, go to resources. Okay. Annie, I hope I answered your question about how to work out if you made money in real terms. So I put it all into US dollars, and I take into account inflation so that I can compare an apple for an apple. Peter, awesome with repetition is the best way to learn. There's a saying I love, repetition is the mother of skill. How much capital would I need, Sonia? I think I'll answer that, but anywhere, if you can either own a house with some equity in it, or in the region of about 100,000 Rand plus, and then it's well worth your while. Trisha, thank you very much. Glad you enjoyed it. Thanks for the positive things. It's a piece, thank you very much. Of the P's, what is the minimum capital? Okay, so I think I'll answer that. Yeah, you're right, Peter. So on the buyers trips, it was generally men that came on the buyers trip. We had a number of women come, but I'd probably say it was 80% male. It's interesting with technology now, it's become much more popular. Like on these webinars, there's a lot more ladies involved, taking control of their lives and being empowered. And Vusi, thanks very much in terms of the process. Yeah, 2020 feels like yesterday and it feels like a lifetime ago in terms of the process. So I'm not sure if anyone else has any questions. I'll stay here for a little bit. Just to see if there's anything else. I know that it's getting fairly late for people. And yeah, let me see if there's any other questions. I'll have a look in the Q&A. Yep, sorry, I didn't do the Q&A. Okay, so people have put, Peter, I've heard about people buying other people's property with other people's money. How does this work? I've been extremely blessed with some money to invest in wealth migrate at the beginning of last year, but now I need to know how to use other people's money. Yeah, Peter, so generally, funny enough, I had a thing today with a guy, and I was actually telling someone this evening, I had an amazing day today. I started with a family in Australia that's worth $800 million, and they own the biggest privately held medical portfolio in Australia and New Zealand. I then moved across and dealt with a lady in Auckland. She's from China, but lived in Auckland for 20 years. And, actually closed a $10 million deal last week in Auckland. Then I watched my son play rugby. Then I dealt with James Painter in America. And he was giving me the insights into where the world's going from a currency perspective and BRICS and everything that's happening. I can't wait to share all that information next week. And then finally, I had a call with a gentleman in England, which is going to answer your question. And it was talking about sale leasebacks. And he's actually writing an entire book. His name's Simon Zutsky. And he started PIN, Property Investor Network. So he's one of the most recognized property investors in England. And the whole process it's called a sale leaseback, Peter, as to how you do it. And you find a seller that doesn't want the hassle of the house, but doesn't necessarily have to sell quickly. And so you take over the asset from them, you pay the mortgage, you run the property better, but you don't need the capital up front. My first property I bought with other people's money as well. I put all the deal together and I got other people to invest. What is the micro degree on the Genius U platform that I remember you had? Peter, you've got access. It's the same micro degree. It's the 8 steps to wealth through real estate. It's in the Wealth University. As a wealth hacker, you've got access to it as well. I was involved in the wealth hacker. What happens when the year is complete? How do I get this for another year? You'll be offered an opportunity, Peter, to renew in terms of that process. Where am I right now? Ernest is asking me. I'm in Knysna, South Africa. So I've lived in Knysna for 10 years. So I always joke with people. I lived in London for 9 years and Joburg for 3 years. I worked in most of the major cities. I choose to live in South Africa, not because I have to, because I want to. I think the quality of life here is amazing. But I moved to Knysna 10 years ago. I've been telling everyone for ages, like, you should move to Knysna, move to the beach, move to the coast. Life's incredible. People are like, no, you can't make money there and whatever. And then COVID happened and now everyone's moved here. So yeah, I hope that helps. Yeah, Simon is on the Genius U platform. That's right. I actually spent a week with him on Neck Island. Cool. And Peter, thanks very much for the kind words. I deeply appreciate it. Okay, ladies and gentlemen. Well, I think I've officially lost my voice. It's probably time for me to go to bed. I've got mountain biking early in the morning. I hope that I've answered all your questions. Oh yes, anonymous. So if I'm not yet a property owner or investor yet, actually beginner, am I allowed to book a call for strategy? Yeah, look, book a call, or probably even better for you, anonymous, go to the link, maybe Shane, if you could just put it up again, wealthuniversity.org/wealthgoingglobal. I would recommend, if you're not a property owner or investor yet, that would be a better place for you to start. It's a course that we've literally created to get you going. So Shane has put it up there, wealthgoingglobal.com. For anonymous, I would probably go there. I want to set you up for success, and even if we meet in a one-to-one call, that's what I'll be telling you. I'm officially jealous. I'm going mountain biking. Yeah, it's gonna be cold, 8 degrees. It was 8 degrees this morning when I went to gym. So yeah. Okay, I hope I have answered everyone's questions. Anything else that I can help with anyone else? Anonymous, I hope I answered your question, and Shane did put it in the link, the chat box. If you just go there, it's wealthgoingglobal.com. Okay, everyone, have a lovely evening. Cheers for now, and see you next week. Make sure you watch your emails. Make sure you tell people. Clem Hunter, awesome. James Painter, awesome. And if you join the mastermind, Fiona, which is off the charts, you know, you can't get access to someone like Fiona other than through the mastermind. So yeah, I'm super excited about that. Have a good evening, everyone. Cheers.